Let Metson African motifs. Today, I want us to look at economic and management sciences, whereby we are mainly going to look at the financial literacy. As we know, paper one is all about financial literacy. So, this is our term two revision. This is our term two revision. So, as you can see, it's a provincial examination, and we are going to prepare ourselves with the June paper that was written in 2024. So, as I've said, it's in relation to grade 9. So, the time that you are to take to write this paper is just an hour, it's 1 hour, and the total marks is 50, and this paper consists of 7 pages. So that is that, good people. Let us be together from the start of this presentation to the end of it. Without wasting much time, let us be on instructions now. Here we are on our instructions and information. Like they are saying, this question paper consists of section A, B, C. So these are financial literacy topics and is based on the prescribed content framework in the CAPS amendment document and 2023 2024 ATP. So section A are short questions. That is question 1.1, matching items. Question 1.2 is choosing the correct word. Section B, that is theory, analysis of transactions and journals, as well as data's ledger. So that is that. Question 2 is credit transaction, theory and analysis of transaction. Question 3, journals and data's ledger. So then we have section C, whereby we are mainly going to look at general ledger and trial balance. That is question 4, which is general ledger, and question 5, trial balance. So instruction number 2, answer all questions are compulsory. So meaning we are going to attend to all questions that are asked on this question paper. Instruction 3, answer all questions in the answer book provided. Instruction 4, you are to write neatly and legibly. So these are instructions, and we know very well that instructions are very, very important. So don't make any mistake of attending to questions before you can go through the instructions. Thank you. So let us now be on our section A, question 1, matching items. So here we are on section A, short questions, question 1, matching items. 1.1, we are asked to choose a term in column A, B that best matches the description in column A. So you write only letter A to G next to the question number. That is 1.1 to 1.1.5 in your answer book. For example, 1.1.6 hash. So that is that. So column A, like we are told, that is what is the descriptions. Column B is what is the description. Like they said, choose a term in column B. So the terms are on column B. Descriptions are on column B. In column B. So that is that. So these are our description and these are our terms. So that is that. So without wasting much time, let's attend to these matching questions. So like it said, 1.1, resells goods at a higher price to make profit. You resell goods, or you sell goods at the higher prices in order for you to make what? A profit. So that is a description. Now we want to see the term that matches this description. So now you can see that if you go through these terms from A to G, you can see that D is a correct answer to match this description, as it is what? Trading business. We know very well, good people, that a trading business buy goods and resell them at a higher price to make profit. For example, a clothing shop buys t-shirts for 100 each and sells them for 150 each. That's what we are talking about. So now we are to go to our answer book and write it in our answer book. Like we've said, the correct answer there is D. The correct answer there is D. So you're going to write that this is D. So we are together on that. So now let us come to the second one, 1.1.2. For every debit entry, there must be an equal and corresponding credit entry. So now we come to our terms, as now we have read the description now. So if you look at these terms now, you can see that whenever we are talking about the entry, that must be equal to corresponding a credit entry, because you're saying for every debit entry, there must be an equal corresponding in credit entry. So here we're talking about a double entries principle. So which means G is our correct answer. Because you know, every transaction affects two accounts. Every transaction affects two accounts. For every debit entry, there must be an equal entry, credit entry. That is that. For every debit entry, there must be an equal credit entry. For example, if equipment is bought for cash, equipment increases debit. Bank decreases what? Credit. So both amounts must be equal. That's what it means. So our correct answer there is G. So let us write it in our answer book. So we are going to say G. So that is that. So now let us move on, good people. 1.13, entries from this column are posted to the general ledger on the date the transaction occurred. So we come to our column B and see which term best match this description. And then we see that, you can see that there on 1.13, that is when you're talking about sundry accounts. That is what? Sundry accounts. So we know that when you talk of a sundry accounts, that is, sundry accounts are used for transactions that do not happen often or do not fit into the main accounts. So we have said the answer for 1.13 is what? Sundry accounts. Like I've said, sundry accounts are used for transactions that do not happen often and do not fit into main columns. So we come to our answer book and then write it. That is 1.13F. So that is that. So now let us go to 1.14. Decreases owner's equity on the debit side. So you can see when you look at these terms in column B that expenses, the correct answer there is B. The correct answer there is B. So we know that that is when you are talking about expenses. So we know very well that expenses decreases owner's equity because they reduce profit. For example, paying wages or electricity increases expenses and lowers what? And lowers profit. So that is what we're saying. The correct answer there, it is B. The correct answer there is B. So let us be on 1.15. Payments for goods sold will be received at a later stage. Payments for goods sold will be received at a later stage. So this is C, credit sales. That is credit sales. So credit sales happen when goods are sold now, but payment is received later. For example, a customer buys books today, agrees to pay after 30 days. So that is what we're saying. Our correct answer there is credit sales. So now we are to write it here. C is a correct answer. So these are our answers for matching questions. Like we have said, 1.1 we have said is D. 1.12 we have said is G. 1.13 we have said is F, sundry accounts. 1.14 it's expenses. That is expenses, that is B. And then 1.15 is C. So that is that. I hope everything is clear now. Everything is clear. So now let us attend to the 1.2, sorry. Let us attend to 1.2, where we are asked to choose the correct word. We are asked to choose the correct word. So that is that. So without wasting much time, let us attend to it. Choose the correct word or term from within the brackets. Write only the correct word next to the question number. That is 1.21 to 1.25 in your answer book. We are given example there, 1.26 receipt. So let us get into these statements and try to find out the suitable words that are going to best match this statement. 1.21, a dash, that is not the dash, they said a bank overdraft or mortgage bond. So here we are going to choose the best word that is going to be suitable. They are saying A is classified as a non-current liability. So we have bank overdraft or mortgage bond. So the correct word that we are to choose there is, the correct word there is mortgage bond. Mortgage bond, that is the correct word. So mortgage bond is a long-term loan used to buy property. Therefore, it is a non-current liability. It is a non-current liability. So for example, that is when, let's say, business borrows money from the bank to buy building and repay it over 20 years. That we call it what? A mortgage bond. Long-term loan used to buy a property. So it is non-current liability. So the correct word today is mortgage bond. Then they say again, dash is a source document that can be used in both the cash receipt journal and cash payment journal. So we are given bank statements or electronic funds transfer, EFT. So the correct answer there is bank statement. The correct answer there is bank statement. As we know that the bank statement can be used in both cash receipts journal as well as cash payment journal because it shows how money received and money paid. For example, stop orders shown on the bank statement go to the cash payment journal, but interest receipt shown on the bank statement goes to the cash receipt journal. So that is why we're saying the correct term or correct word there it's bank statement. Let us move on. 1.23. Then they're saying dash purchase will be recorded in the trading stock column. So we are given merchandise as well as consumables. So the correct term there is merchandise. The correct term there is merchandise. Merchandise means goods bought for resale. For example, a grocery shop buying cold drinks to sell to customers. So the correct term is the merchandise purchased will be recorded in the trading stock column. 1.24. Dash are recorded in the balance sheet account section. So we are given assets or expenses. So assets are the ones that are recorded in the balance sheet section. So the correct term there or word is asset. As you know, assets are things owned by the business and are shown in the balance sheet account section. For example, you can talk of vehicles, you can talk of equipment, you can talk of trading stock, you can talk of bank. That is that. 1.25, the dash indicates the maximum amount that the debtor can owe to the business. So we have credit limit, credit record. So the correct answer there is credit limit. That is a correct word. So we know very well that credit limit, the credit limit is the maximum amount the debtor is allowed to owe a business. So that is that. So this is the end of our section A. So now let me go to the answer book and write those answers. Like we have said, the first one, 1.21, we have said the correct term there is mortgage bond. It's mortgage a bond. Remember that is when we're talking about the long-term loan used to buy properties. So 1.22 is a bank statement. It's bank statement. 1.23 is merchandise. It's merchandise. It's merchandise. The merchandise. And 1.24 is assets. And 1.25 is a credit limit. So that is that. So now we can now freely attend to section B, question 2. So here we are on section B, question 2. Section B, question 2. So this is the section that we are going to attend now. So section B, question 2. So we are on section B, that is theory, accounting, equation, and journals. So question 2, that is when we're going to talk about credit transaction, theory, and analysis of transaction. So it says the invoice below refers to credit sales transaction, where the business sold goods at a markup of 60%. So study the source document and answer the questions that follow. So we are to study this source document. As you can see, we have invoice that goes to, our invoice goes to G. Smith of this address, 10 Protea Street, Pretoria, 1050. So the invoice number is this, as you can see, 44 Cricket Avenue, Johannesburg, 1000. Date here this on the 15th April 2024. So SA Sports Stories, we have quantities, we have unit price, we have amounts as well. So that is that. The terms is how many days? 30 days. So the special instructions is none. So now it says 2.1, the questions. Identify a data in the above transaction. So we have to identify a data in the above a transaction. So you can see now our data there is what? It's J. Smith, because our invoice goes to J. Smith. So J. Smith is our data. J. Smith is our data. That is that. So now you are to go to our answer book and write it there that our data there is J. Smith. Our data is J. Smith. That is our data. Because the data is the person who received goods on credit and must still pay the business. So that is that. So if J. Smith buys goods today and pays next month, it means now J. Smith becomes the data. So hope you're together on that. Then the second question says, state the law which protects both the business and the consumer in the above transaction. So the law that protects the business and the consumer is National Credit Act. Is National Credit Act. So we are to write it here. That is National Credit Act. National Credit Act. So as we know that National Credit Act protects both business and consumers during credit transactions. It ensures fair credit practice. For example, a business cannot charge unfair interest rates to customers. So that is that. Hope you're together on that. Let us be on 2.4, good people. Let us be on 2.4. So 2.3, sorry, 2.3 says, suggest one practice which the business can put in place to get the data to pay on time, to get the data to pay on time. So that is 2.3. So I'm sorry, I did write this incorrectly. So I just see where now I don't have the space. So the first one, J. Smith, was supposed to be here. J. Smith. Then remember here we have said is National Credit Act. National Credit Act. So now we were asked now in 2.3 to say, suggest one practice which the business can put in place to get the data to pay on time. So that is where we are. So for our data to pay on time, that is when you grant discount for early payments. Just make sure that you grant discount. You just grant, sorry. Let me write it in a clear way. You are to grant a discount. Make sure that you grant a discount for early payments. For early payments. So make sure that you give a discount for early payments. So that is that. So make sure that the business encourage debtors to pay quickly by offering discounts. Like for example, you can say pay with 10 days and receive 5% discounts. That is what we are saying. That is that. Or you can even charge interest or penalties on overdue accounts, late payments. Or we can send reminders to debtor to pay his or her account. We can make call, we can email, do messages. So that is that you can do. So we'll be together on that. So let us be on 2.4. 2.4 says analyze the transaction from the source document above, which is this source document, and show the effect that it has on the accounting equation. So now we are asked to follow the example and column set out in the table in the answer book. So let us go to our answer book. So the example that is given here is this. Remember, we are asked to analyze transaction from the source document and show the effect that it has on the account equation. So we follow the example and columns that are set on the table below. So example says receive 2,000 rent from the tenant or for the building let to him. So that is example. Number is that example. So account debited is bank, as you are going to receive that money. Then account credited is rent income. So the rent income, as you know, all the incomes have what credit balance. So the amount is how much? 2,000. So the effect on account equation, our assets are going to increase because the money is going to go into the bank. Also our incomes, because whenever we are on owner's equity, we talk of incomes, we talk of expenses. So it means now this is going to increase our owner's equity. That is the example that we are given. So now let us be on our 2.4 now. As we are given sales of 8,496. So the sales is credited. So we want to know the account that is going to be debited as our sales are credited. So let us be on our information. The amount that you're talking about is this 8,496. This is the amount that we are talking about. So now we want to know the account that is debited. As we are talking about what we are on the credit sales. So it means that now if we have this credit of sales, it means now we're going to have a debtor being debited. So that is that. Hope we get that. So sales is on credit, debtors control increases. We know debtors control is going to increase. And also our sales are going to increase. So the amount is 8,400. Why are we saying that the customer received goods on credit? So the business will receive money later. So it means our debtors is going to increase as well. And then the sales income is and owner's equity increases. So that is why when you see here, we're saying that our assets are going to increase. Remember, our debtors falls under assets. So the business will receive money later. So it means our debtors is going to increase our assets. Then also our sales as income is going to increase what? Our owner's equity. So that is that. Then we have trading stock on the credit side. We are not given the account that is going to be debited. We don't know the effect on the accounting equation. We don't know the effect on the accounting equation now as we have a trading stock. So whenever we have trading stock, so it means now if the trading stock is credited, so it means now we want to know the cost of how much it cost us for the stock. So it means here we are going to have what? Cost of sales. We are going to have cost of sales. So this is our cost of sales that is going to be debited. So Now we want to know the amount now. We don't even know amount. We don't know the effect on accounting equation. So we know that the business uses a 60% markup. This is what we were told that the invoice below refers to credit sales transaction where the business sold goods at the markup of 60%. So this means that the selling price is equal to, we are going to say sorry, we are going to say selling price is equal to cost price plus 60% of cost price. So that is that. So meaning to say now, we are going to use the formula. Now we are going to use a formula. Wherever our formula is going to be cost price is equal to 100. So we know all our goods are produced at a 100% cost over 160 because you have said our selling price is cost price plus the 60%. So it means we're going to have 100 over 160 times now our sales, which is 8,496. And then this will now give us now, this will give us now 5,310. To give us 5,310. So when you multiply this, then that is the calculations that you're going to get. So it means now our amount here is going to be 5,310. So the business sold stock worth 8,496, but the stock original cost the business 5,310. So that is that. So now we want to know the effect on accounting equation. So this simple says now we are going to have a minus 5,110 on assets. We're going to have minus both sides of even on owner's equities minus. So that is that. So accounts affected is the cost of sales is going to increase. So once cost of sales increases, now it means now our assets are going to decrease. So trading stock also is going to, so our trading stock is going to decrease. And you know our trading stock is an asset. So our trading stock is going to decrease. The cost of sales as well is going to decrease on our owners' equity. But liabilities, you know very well that there is no effect. So this is how we were expected to treat this question. Hope we are together on that, good people. Hope we are together on that. So now let us move on to, let us try by all means to move on to question 3 now. Let us move on to question 3. So here we are on question 3. Question 3 is all about journals and debtors ledger. Journals and debtors ledger. That is our question 3. So question 3 it says, well, the Ardal is the owner of the Dal bookstores and he buys and sells published books. So the business normally uses a markup of 75% on share sales transaction and 100% on credit sales transaction. Required now 3.1. Use the information provided below to record the transactions for the DAL bookstores in the following journals and ledger for the month ending May 2024. Do not close off the journals at the end of the month. So we are required 3.11 to do cash receipt journal, 3.12 cash payment journal, 3.13 debtors journal, and 3.14 says debtors ledger show only how the transaction dated 27 will be recorded in the debtors ledger account of E. Bilton. So 3.2, the business did not achieve intended markup of 75 for the transaction dated 11. Show all the calculations. So that is that. Show all the calculations to justify this. So now we have these transactions from day 3 to day 27. So these are the transactions that you are going to use for us to make all that is required from us under this question. So we are together on that. So the first one we are asked to do what? The cash receipts journal. Cash receipts journal. So now we are to go to these transactions that you've talked about. You are to go to this transaction, not forgetting the markup percentage that you are given this. So as we are doing or we are working on these transactions, for transactions that are going to affect these markups, let us remind that we have those markup percentages. So that is that. So now, as it says, we are to do cash receipts journal. So cash receipt journal, which is CRJ. Now we go through this transaction and you can see now the transaction 11. Transaction on 11 May, that is this transaction. This transaction says cash sales of merchandise according to the cash register roll, 7,000. And cost price is how much? 4,375. So you can see we have the sales of 7,000. And we have cost sales of how much? Of 4,375. So these are to be entered under CRJ, Church Receipt Journal. Why entered in this Church Receipt Journal is because money was received. We received this money, and because of we did sell the merchandise that amounted to 7,000 with this cost price of 4,375. So now let us record it under in our answer book. So in our answer book, yes, we have document number. We are going to have CRR, cash receipt journal. We're going to have CRR. It is on the 11. So that is a cash. That is a cash of how much under analysis of receipts? 7,000, which we know very well that it is going to go into the bank account. So that is 7,000. So this was for sale because we sold the merchandise that cost this much. So under this column of sales, we have to write 7,000 to show that it was for the goods sold. That is 7,000. It is 7,000, sorry. 7,000. So how much it cost us to sell all those? It cost us how much? 4,375. 4,375. So that is that. So now we are done with that. Let us go and see the other transactions that do affect our CRJ. Let us go to another transaction that do affect our CRJ. You can see now on the 27. On the 27, E. Belton paid 30% of the amount from the transaction dated 15 and receipt number 24 was issued. Receipt number 24 was issued. So now we are talking about the 30% paid by E. Belton for the amount of transaction dated 15. This is the amount dated 15. So on the 15, there was invoice number 39 issued to E. Belton for goods sold on credit to him that amounts to 2,600. So it means whenever we're talking about the invoice, it means the goods were bought on credit. So E. Belton bought goods on credit of this much, 2,600. So on the 27, we had that E. Belton paid 30% of that amount. So meaning to say we are going to say 30% multiplied by 2,600, and this will give us 780. So this is the amount that we have to enter into our cash receipt because this is the money we received, 780. The debtor paid only part of the account, which is 780. So now we are going to write that money. So it was on the 24. That is a 24, not only 24, but the 24 is what? That is a receipt number. The 24 is a receipt number, but the day is 2027. So details, we are going to write E. Belton. That is E. Belton. So how much? That is 780 that we write under analysis of receipt, which goes to the bank. That is 780. So debtors control now because this bill E-Belton is our data. So under debtors control, you're going to write that 780. Hope we are together on that. So now, even if you can go through other transactions, you can see now there are no other transactions that do affect our cash receipt journal. So now we are to do cash payment journal. Cash payment journal. So cash payment journal, if you can see on the third, it says processed electronic funds EFT of 132 for 6,100 as a payment to Goosebump traders. Goosebump traders. 5,400 was for trading stock, and the balance was for printing paper. So that is that. So meaning to say, what this means is that with people, what this means is that we have total payment which is 6,100. 6,100. That is going to go into our bank. 6,100. That is our total payment. And then we have ready stock, which we are told that is 5,500. 5,500. Let me write it. 5,400 in fact. And then we are told here that the balance, and then we're told that 5,400 end was for trading stock and the balance was for printing. So the balance was for printing. Meaning we are going to say 6,100 minus 5,400, and then it will give us how much? It will give us 6,100 minus that, it will give us how much? So let's see how much the balance for stationery will be. The balance for the stationery is going to be 700. It will give us 700. So now we now know, let us now go into record it as we are under cash payment, that is EFT. So as you have said, it is on the 3rd, and then we have know that that is a Goosebump traders. We have Goosebump. That is a Goosebump traders. Our total that goes into our bank is 6,100. And we are told that for trading stock is how much? 5,400. And the remaining, we were told that it is for printing paper, that is a stationery of how much? Of 700. So this is how we do it. This is how we record it. So this is how we record it. So that is that. So the balance of the payment was for printing paper, which is stationary. So hope we do understand that. So meaning to say, for us to have this amount, we're just saying 6,100 minus 5,400, and then we get that at 700. Hope it is understandable. So thank you for that. So now we are not done. We are not done. Let us go to other transactions, see the transactions that do affect our cash payment journal. Our cash payment journal. So if you can go to the transaction on the 20, if we are on the 20. So on the 20, you can see that it says a stop order for 3,200 reflected on the bank statement as the monthly salary. Payment for the bookkeeper J. Rowley. So now we're talking about the payment wages of 3,200. So 3,200, then we have to write this here, whereby we are going to say BS, and then it is on the 20, and then we are going to say J rolling, sorry, J rolling. So we are going to say J rolling. And then how much is our wages that you're going to pay? That is 3,200. So now you're going to write it under sundry accounts because there's wages, you don't have column for it. So we are going to say amount 3,200, and then we give details or description of what this amount is for. So it is for salary, sorry. It is for salary. Then you just write here salary. So that is how easy we are to do. So now let us now go to another question. The other question wants us to do debtors journal. We are done with cash payment journal. We are done with cash receipt journal. So we are asked to do debtors journal now. We are asked to do debtors journal. So hope we are going to understand how we are going to do the debtors journal. So debtors journal, which is DJ, we are going to calculate cost of sales calculation. So we have sales amount. How much is our sales amount? So that is very important that we are going to do for us to calculate what we call a debtors journal. So for us to calculate debtors journal DJ, we are first going to say how much is our sales amount. That is very important. Sales amount. So our sales amount is 2,600 because this is the amount I'm talking about. So we sold the goods that amounts to 2,600 to Ableton. So that is our sales amount. But we are told that the business uses 100% on markup on credit sales. So let us see what you're talking about. Here it is. 100% on credit sales transaction. 100% on credit sales transaction. So there it is. So now what we are going to do is that we are going to say a selling price. Now we are going to say selling price. Selling price is equal to 200%. Why? Because you know very well we are going to add our cost price. For us to get selling price, you remember we have said that is a cost plus that percentage. So meaning you're going to say cost plus 100%. So it means now we're going to say the selling price is 200% of cost price, That is that. So meaning to say we are going to say a cost price is equal to 100 over 200 times our sales amount, which is 2,600. And this will give us 1,300. So that is how easy we are going to do it. So now we are to record it in our answer book. First, we are going to say document number 39, on which day? On 15. And then we have our data, which is Belton. Belton. So we have said the sales amount is how much? Is 2,600. And we did calculate our cost of sales, which is 1,300. So this is how easy we are to calculate that. So now let us now come to, to other question. Let us be on to another question, 3.14. So 3.14 is all about saying debtors ledger. Debtors ledger show only how the transaction dated on the 27. 27th will be recorded in debtors ledger account for EB Balton. This is the transaction that we are talking about, the transaction 27. So what is now we are to attend to that transaction. As it says, EB Balton paid 30% of the amount from the transaction dated 15th, receipt number 24. Receipt number 24 was issued. So that is what you're going to work on. So it means now we are going to just take the amount from cash receipt journal and we're done. So what you're going to do there in 3.14, let us go to our answer book. So what we are going to do, as you are told, that is on the 27, you're going to have receipt. We are going to have receipt number 24. And then we are going to have what value we can now write our cash receipt journal, whereby our amount is going to go to on the credit side as 780. So why receipt number 24 credited? So it is because the debtor paid money. So the amount owing decreases. For example, if a debtor owed to 2,600 and paid 708, the new amount owing becomes smaller. So that is why we are going to put it right there. So hope you understand. So let us be on 3.2. 3.2 says the business did not achieve its intended markup of 75% for the transaction dated 11. Show calculations to justify this. Show calculation to justify this. So that is what we are asked to do. So for us to do that, let us be on the answer sheet and then try to do it there. For us to do that, you're going to have markup calculation on 3.2. You're going to have markup calculation, whereby now we are going to say step one, we have to find the profit. That is our step one. We have to find a profit. So for us to find the profit on this step one, we have to know that we have sales. How much are our sales? Our sales are 7,000. Here it is 7,000. So we are going to write 7,000 minus 4,375. 4,375. That is our cost price. So here it is 4,375. So this will give us 2,625. 2,625. So step two now. Now step two, we are to calculate markup percentage. Markup percentage. So on markup percentage, that is where we're going to use a formula where we're going to say profit divided by a cost price multiplied by 100. So that is that. And then we know that how much is our profit? Our profit, this is our profit, 2,625 divided by cost price. How much is our cost price? That is 4,375. I'm talking of this amount. So multiply now by 100. So this will give us how much? 60%. Remember the question says the business did not achieve the intended markup of 75% for transaction dated on them. So we have to show to justify this. So for us to justify this is because now we now know that we have 60% markup. This is a 60% markup. And then we didn't reach what the 75% markup that the business intended to achieve. Because even in our questions, in this day, even in our question where we said 75% on chase sales transactions. So we know when the business did not reach that because they only earned to they only enter 60%. So that is that when you answer that question, that is how we are going to answer it when you show through the calculation. It's because the business only reaches what, 60%, not 75%. So now let us now go to question 4, section C. Let us be on question 4, section C. So here is about general ledger and trial balance. General ledger and trial balance. So we are on question 4. It says the following records were extracted from the books of NEF wholesalers on 31st March 2024. Required now. Use the information below to complete the general ledger accounts for the month ending 31st March 2024. So 4.1 bank, that is balance indicated in the bank account, as well as cost of sales. So we have to calculate bank and cost of sales. We have to calculate bank and cost of sales. So column totals in subsidiary journals of NEF wholesalers on 1st March 2024. So we have cash receipt, we have cash payments, we have debtors journal, all for NEF wholesalers. So that is that. So what we are asked first, we are to do what? The bank. We are asked to do bank. So meaning to say we want to calculate the total bank account to how total receipts calculated. So meaning to say, we know that for us to calculate that, we know we are going to try by all means to see that all money received increase the bank account. We know very well that all money received increase what? The bank account. So the monies that are going to receive bank account is sales, debtors control, and sundry accounts. Meaning we are going to say for us to calculate our bank, for us to have the total receipts. That is when by you're going to have 79,857. 79,857. 79,857 plus our debtors control of 11,780 plus again our sundry accounts of 60,000. So all this will give us 127,000. Will give us 127,000. So all in all, they will give us 151,637. So that is the amount for our total receipts. So let us go and record it there in our books. Already we are given the balance brought down of 23,100. So now we want to total receipts. So already we have calculated our total receipts, which is 151,637. That is our cash receipts journal. So that is our total receipts. So now we have to know our cash payment journal. So if we come to our cash payment journal, as we have seen, as we have our bank cash payment journal, as you can see, we have it here is already given. This is 127,882, because when you add trading stock, stationery, wages, and sundry accounts there, they are going to amount to this. So it means that our total cash payment is 127,882. So we are going to write our cash payment journal here where we said it's 127,882. So that is that. So now what you're going to do now, right now, is to add the side, which is now going to give you 174,000 737. So that is the bigger side, as you can see. So we are to write it even both on this side, on the credit side, 174,737. So now we are going to look for the balance carried down. We have to have balance CD. So we have to have balance CD, and then also here we are going to look for balance brought down. We are going to look at balance brought down. So let us do our calculations to find out those. So our balance carried down now is going to be 46,855. Then you're going to carry it for the next financial year or the next month. That is going to be to the next month is going to be still 46,855. So this is how we were expected to do this. So now we are to calculate the cost of sales. We are to calculate the cost of sales. That is what we are asked to do. So for us to calculate the cost of sales, we are just going to take the amounts from our cash receipt journal as well as our debtors journal. So if you can look at our cash receipt journal, our cost of sales, here is our cost of sales. As you can see, this is 27,760. This is the amount that I'm talking about that you're going to use. So we're going to use even from debtors journal. So our cost of sales from debtors journal, here it is. As you can see, that is 13,941. These are the amounts that you're going to use. So we are going to say, when we are here, we are going to say date, that is 2024 March, and then that is on the 31st, that is 31st, and details, we are going to have trading stock. We're going to have trading stock, then we have CRJ of how much? 27,760. That is from cash receipt journal. Also, we are going to have, let me see. Yeah. Also, you're going to have trading stock here again. That we know now this one comes from debtors journal. Like I've said, that is 13,941. That is how we calculate our cost of sales. So that is how easy we were to do 4.2. Hope you understand on that. So 4.2, we are done. Then we are to go to question 5. Now we are to attend to question 5, which is our last question. Which is our last question. So question 5, like I've said, here it is. Question 5 is about trial balance. Question 5 is about trial balance. As it says, the following trial balance has been extracted from the books of Savoy traders. So the bookkeeper has fallen ill and the owner. So Joy Savoy is struggling to complete the trial balance for the month of February 2024. So required now 5.1, use the additional information provided below to assist you to complete the trial balance for Savoy traders for the month ended February 2024. So that is that. So here is our information. As you can see, trial balance of Savoy traders for February 2024. So we are to use additional information provided below to assist you to complete the trial balance. So all we have to do is to complete the trial balance using this additional information. That is that. So we are going to use we're going to make use of that additional information. We're going to use that as additional information. So let us start there with additional information, because you can see here, here is our trial balance that we are told that is not complete. Our trial balance is not complete, and we are to complete it. That is what you're going to do. So it says on the additional information, the owner's capital contribution at the beginning of February was 120,000. So it was 120,000. So she had to increase her capital contribution to 140,000. So that is what you are going to do now. Now we are to write 140,000 on a credit side. So here we are, we have capital, and then, so on that capital B1, you're going to write what? 140,000. The 140,000 that we were told that the capital was increased to. So that is that. So now it says to date, the owner had taken 8,000 cash for personal use. Now we are told about what? Drawings now. So we have to write this drawings. Now we have to write what? Drawings. So we are going to say drawings. That is balance sheet. This is a balance sheet 1, balance sheet 2. So drawings is how much? 8,000. So we know drawings is to be on the debit side. So the open was 120, increased to 140,000, which is our capital. So the owner added more capital during the month. But the drawings, it goes on the debit side. So the owner took cash for personal use. So that is that. So now let us go to the other transaction on the additional information. So let us go to other transaction and try to see. So here we are now on the third additional information. As it says, the business uses the markup of 33 and a quarter on sales and 1/3% on all sales transaction. So what we are going to do there, as we are now going to be on the calculation of sales. So it means now we are going to say 75,000. 75,000 is the 75,000 of our sales. This is the amount that I'm talking about. Multiply now by 33 and third percent. So when you put this into decimal places, it's going to be 0.33. So let us put it this way, 0.33. So when you multiply this by 0.33, it's going to give us how much? 24,975. It's going to give us 24,975. So when you add now 75,000 plus 24,975, this will give us 99,975, which is approximately 200,000. So that will be the amount that will be our amount for sales. That will be amount for sales. So meaning to say, for sales, we are going to have what? 99,975 on the credit side. So we are going to have this 99,975. That is a nominal section 1. So the N1 means nominal. So now we come to N2, cost of sales is already there. So what are we to calculate now? Sundry accounts. Because it says an amount of 2,200 for stationery was excluded from the sundry expenses. So meaning to say what we are going to do for us to calculate that amount is just simple to add that to our sundry expenses and then we record it. So meaning what you're going to say, we have our sundry expenses as 2,050. So I'm talking about this amount. So we are going to add the excluded amount of 2,200. I'm talking about this amount. So all of this will give us how much? 4,250. 4,250. So now we have to record it there. Sundry, as you know, is an expense. It's on the debit side. N5. So nominal section 5, we are going to write 4,250. So that is that we are done. So when you add all these sides, they are going to give us 275,975. Even these sides, 275,975. So it balances. So that is all. So this is the end of this presentation. Thank you very much for your time, and please make sure that grade 9 make use of this presentation. It is very helpful. Thank you. Thank you.